Welcome to our latest episode of Boardroom Chats here in beautiful Martha's Vineyard. I'm Derek T. Dingle, Chief Content Officer at Black Enterprise. My guest today is Toney, founding managing partner of Plexo Capital. Plexo Capital is an institutional investment firm that invests in emerging seed stage VCs led by diverse teams. Thank you for joining us.
Thanks for having me.
How busy your schedule is, and dealing with VC investments and the growth of Plexo Capital.
Yes.
And actually, I wanted to start there. I wanted to share with our audience, one, how did Plexo Capital, how was it formed? Mm-hmm. Why was it formed? And what is its model,
Sure.
in terms of deploying capital?
It all started when I was an investing partner with GV, which was formerly known as Google Ventures. That's the early stage investing unit for Alphabet, Google's holding company. At the time, we have to take ourselves back a little bit, about almost a decade ago now, Larry and Sergey, the founders of Google, wanted the team at GV to deploy more capital because the model of investing into startups had proven to be successful. And GV has a unique model within the world of venture capital. I think when most individuals hear of a venture capital firm that rests underneath a corporate umbrella, the obvious thought is, okay, the goal is to be able to identify promising companies for the mother company to have some type of relationship with, as opposed to a standalone financially focused venture capital firm, which is just purely in the business of providing returns back to the investors and to the general partners. But the goal of GV is a little bit unique in that even though it's underneath the Alphabet umbrella, the behavior, and Alphabet is the sole limited partner, and limited partners are the investors in venture capital funds, GV behaves more like a financially focused firm. So the goal is to make money, to identify the best entrepreneurs possible, building game-changing companies that are going to go on and create venture scale returns. So the model is a little bit different. In fact, the operations are a little bit insulated from the rest of Google and the other bets underneath the Alphabet umbrella, such that if someone wanted to come into the GV office, their Google key card would not work. Right? So the GV key card would give access to Google to go to the cafeteria and things, but it was a way to be able to make entrepreneurs feel comfortable that we were not at GV, we were not going to send their business plans over to Larry and Sergey or to other people.
A different culture, a different environment, sort of a standalone.
That's right. A standalone format for investing, more like the traditional financially focused venture capital firms. And so GV had grown to be successful. Larry and Sergey wanted GV to deploy more capital. We looked at a number of different strategies to identify more opportunities to fill the top of the funnel for the consideration set. And one of the interesting things is that there was this thought around the general partners of earlier stage venture capital firms. So in other words, venture capital firms investing at the pre-seed or seed stage, really the inception point of companies, kind of before GV would come in, which would be a little bit later at what we call a Series A financing and beyond. And we saw that these venture capital firms led by Black general partners were able to identify some really interesting deals early on, right? And so I think the hypothesis was that, okay, if we can partner with some of these venture capital firms led by Black general partners, we'll be able to see some deal flow. And I think, one would ask, okay, well, why were these Black general partners kind of seeing interesting deal flow? And I think it really comes down to something that I can relate to, maybe it's relatable on your end and to some of your audience, which is, we tend to have, as Black professionals, we tend to have these unique networks, right? Like I've got my network of my friends that I'm on a group chat with, and a lot of them are in all different types of industries, right? And most of them are not in the corporate world. They're definitely not in the financial world. And so I end up with these unique networks that are able to give me access and insight into other areas of opportunity, but yet I still have my traditional, what would almost be deemed as this traditional venture capitalist network as well.
For example, the alumni of Hampton, where you went to school.
The alumni of
That's a business
Hampton,
network.
or when I went to business school at Cal, the alumni of Cal as well, right? So I've got these traditional networks as well as these unique networks. And so I think what that does is it allows one to have two things. Number one, a different network to access deals. But then I think also, second, which may arguably be more important, a different lens of experience to be able to identify certain opportunities that others might not see. So what we did at GV is we made 5 investments into venture capital funds led by Black general partners, and the strategy worked for us, right? So this is back in like 2015 or so. And then around 2016 in February, there was a convening of people that were thinking about different ways to increase diversity across the ecosystem. And I was part of that group, and I said, hey, I think there is an opportunity to expand some of the work that GV has been doing, right? And create a standalone firm that was designed to invest as a limited partner into venture capital funds led by Black general partners, and I expanded that to include other people of color and women, and then source deals to invest directly into from the portfolios of those funds where there was a limited partner investment. So it'll be this model of both investing as a limited partner and then investing directly. And so I was fortunate that the meeting that was convened was led by one of the senior executives at Alphabet, who gave me the green light to go ahead and pursue that. I got support from my former manager, David Crane, the CEO of GV. And I explored it for about 6 months. Then around Thanksgiving, I decided that, hey, there really is an opportunity here. And I was able to transition my role as an investor at GV into an entrepreneur in residence at GV, where I was able to incubate what ultimately became Plexo Capital. So incubated it for about 1.5 years. And then around the spring of 2018, I was able to spin the firm out, and Alphabet came on as our anchor investor, along with Intel, Cisco, Hampton University, Ford Foundation, and a few large family offices. And we've been in business ever since, and now we've just completed our second fund, and we've made a total of 55 LP commitments, so 55 investments into venture capital funds across 37 firms. So in some cases, we've gone on to invest in one fund and then invest into another fund. That's called a re-up. And then we've also made 51 direct investments as well. So these are companies that we came to source from the portfolios of those 55 venture capital funds, and really even some of the other funds by those 37 firms.
In terms of this bifurcation, what percentage is the investment into the actual funds, and what is percentages investment into the actual, companies that are from the fund?
Right. So we're about a 60, 65, 40, 35% split between LP commitments and then direct investments.
Okay. So when you look at this model, how is that a game changer in VC, especially as it relates to African American VCs who gain roughly 1%, if not less, in terms of financing? When you say Black and Latinos, it's just 1%. How is this a game changer, not only for the companies that the funds that you're investing in, but for other, venture capitalists that are looking at, Plexo's model?
So I think when we look at those statistics around the dollars that are committed to venture capital firms led by BIPOC individuals, and then also look at the companies that receive funding that are led by BIPOC founders, right? All of the numbers, and let's talk United States statistics, all of the numbers show that there is less capital going into both firms, funds, as well as companies than the BIPOC community represents demographically within the United States.
So that we can just be a bit more instructional to the audience, how large are the two funds that you have? And if I wanted to be a part of the Plexo Capital portfolio, what is the process for me gaining consideration?
So Fund 1 was publicly announced, that was $42.5 million. Fund number 2 was larger than Fund number 1. And the process that we use is to develop a way to create a level playing field, at least as much as level as we can possibly do. We were inspired by one of our limited partners, Kapor Capital. So Mitch Kapor and Frida, his wife, they have a model within Kapor Capital, which is now, they've succession planned successfully, they've transitioned it. So the next generation started to accept interest for receiving an investment only through a structured process to come through the website. And we do the same process. So whether it's a venture capital firm looking to see if Plexo Capital would be interested in being a limited partner, an investor in their fund, or it's an entrepreneur, we have the same process. So it doesn't matter if it came from someone that I know personally, or if it was a personal referral from one of our investors or another entrepreneur. What we do is we have a structured database that takes all of their information, and then we schedule a meeting. So we'll meet with anyone that would like to receive consideration as long as they meet our criteria, right? So there's industries that we don't focus on. There's some geographies that we don't focus on. So our focus is around technology companies. Okay. So we really try to focus in on companies that are creating some type of software or a technology-driven service that focuses on business buyers. So that's called broadly enterprise market. So businesses created to sell to other businesses. And of our portfolio, about half of the companies, 47%, are some type of enterprise model. And then that's followed by financial technology, marketplace/e-commerce, and then a little bit of consumer. So those are the industries that we focus on. And we have different theses that focus on those areas. For example, within enterprise, we have a thesis around the fact that it builds off of what Mark Andreessen said probably over a decade ago. Software is eating the world. So software has now eaten the world, right? Every company, even if it didn't form in Silicon Valley as a technology company, every company that's at scale is a software developer, a software vendor, or a software integrator. The problem is there's not enough software developers to go around. So the thesis that we have broadly around enterprise is we look for opportunities for the efficiency of the process of ideation for different types of software solutions, development of different software solutions, the deployment, the management, maintenance, and integration. So if we're not going to have enough software developers and engineers to fill all these roles, we want to make sure that the existing software developers and engineers have tools that make this process or these processes as efficient as possible. I'd just like to say, everyone talks about AI. I mean, this is actually a place where we've seen AI be very beneficial to a lot of these areas around software development.
AI specifically, from your vantage point, what does that mean for Black and minority entrepreneurs as an area of opportunity, generative AI? How do you see that flourishing and growing, and how do you see Black and minority participation in that as entrepreneurs?
I think for the Black community, there's a couple of things. I'll break apart your question into some of the challenges that we might face as consumers, and then opportunities as well. So I think there are some challenges. If we really dig into these models and how the models work, the models are trained off of data right? And then there are a group of people that are basically instructing or writing the software code to instruct it how to interpret that data, right? And then kind of the AI is kind of smart enough now where it kind of also does its own interpretation, but everything starts with the data. And so one of the challenges that I think we face as a Black community is that if we are not well represented as a part of both the data and the way that the data is interpreted, then that can obviously lead to some problems. And I think there's a lot of just real world problems that we could see. There are a lot of elements around AI that we need to have conversations around and make sure that we're involved in those conversations with the developers of the training sets as well as how that data is interpreted so that we can minimize the instance of these unintended consequences.
Because the data that you source can create a discriminatory effect.
That's right.
But also, the data that you source can create opportunities.
That's correct, without question.
Yeah. And how do African American entrepreneurs leverage the opportunities?
Well, I think one big opportunity would be to identify how to help a lot of these large firms have data sets that are more inclusive and then explain how to minimize some of these unintended consequences. Because I think, if we were to ask most companies, right, is their objective to have a system that, let's just use the financial services, for example. There are unintended consequences sometimes in financial services where you could all of a sudden have a good intention of identifying the best possible customer for a financial product, but then all of a sudden, if a few instances flare up, all of a sudden you're eliminating a whole ethnic group or zip code, right? And so how do we help the people that are developing the data sets and the prompts to help train these models understand how to be more inclusive? And I think that's a big opportunity in and of itself. But then I also think there's going to be great opportunities for Black entrepreneurs to be able to benefit from other areas that maybe the Black entrepreneur has an insight into that no one else is thinking about. And this goes back to my thought around, the reason why GV was investing in these Black general partners, right? Maybe because of my background, I have some insight around a particular problem. This is not dissimilar to,
the lens.
Yeah, this is not dissimilar to, thinking about how Black women spend a disproportionate amount of their household income on beauty care, right? Hair care, skin care, largely because they don't see the products developed at scale that have a lower price point. And so a lot of great entrepreneurs have been able to go in and fill that need based on their insight into it. We have a company ourselves that's in the weave space. Deshaun Amara from Maven, right? Like, he saw that all of these stylists were going to these beauty supply stores and buying the extensions for their customers, and they weren't participating in the economics. So he said, hey, I'm going to build a marketplace. I'm going to go source hair. I'm going to share the economics with the stylist, right? Because he had that insight into that area. And I can remember being at another firm that I won't name when that deal came through and that deal was passed on, and I brought the deal in, and it was passed on because the person leading the firm didn't understand the market. And so since she didn't have a need for that, then she said, well, the need must not be big. She didn't have the insight. She didn't have the experience. And so I think that's going to create a lot of opportunities around AI for Black entrepreneurs that have these experiences to see a need that's not being met by AI.
She didn't have the appreciation for the cultural needs.
That's right.
And she didn't have the lens.
That's right.
Yeah. Which brings me to your background. For you to bring together technology, bring together finance, bring together obviously the cultural focus and the opportunities and the appreciation of the lens. That evolved from years being in both the technology and the venture space. Share with our audience, your journey because you've been in Silicon Valley a long time, but
Yeah.
you're of the Bay Area.
Correct.
You grew up in Oakland.
That's right.
And tell me how you took that long journey from Oakland to Silicon Valley
Yeah.
and succeeded.
It's, it's interesting, even just thinking about, even though Oakland and Silicon Valley, which we can broadly define its origins as being in San Jose, actually, not San Francisco, that area is a metropolitan statistical area, right? That's the San Francisco, Oakland, San Jose MSA. And even though Oakland is, I don't know, maybe 40, 50 miles from San Jose, it's not that far, but if we were to go back decades, they are worlds apart, right? Oakland didn't have the participation necessarily within Silicon Valley. And so even though it was just a quick jaunt down the 101, 880, I mean, it couldn't have been two different worlds, right? I was fortunate for a few reasons. Number one, I was very interested in technology, so I started doing computer classes when I was in high school and continued that when I went to Hampton. Even though I didn't major in computer science, I took computer science classes. I was very interested in technology. And then when I went to Cal, I did my MBA, but I also did a program with the School of Engineering, Management of Technology, so I got to hang out with engineers and computer scientists. When I was going through the process of doing the internships as an undergrad at Hampton, I was fortunate. So I have an aunt who was immersed in the world of Silicon Valley, both from the technology side and from biotech. Okay. Yeah, so she was the CFO of Atari. She was the CFO of a life sciences company called Sios Nova. She took that company public. She took a data analytics company, Sagent Technology, public as CFO. And then I had an uncle who was one of the early and most senior executives at Applied Materials. Applied Materials builds the equipment that builds semiconductors, right? So they're the equipment behind the semiconductors. And I was very fortunate to be able to have an internship at Applied Materials, be able to spend time with my aunt. They made sure that I was able to meet a lot of executives. So I was very, very fortunate in that regard. And, worlds kind of collide at times. The thing that I thought I wanted to be when I was kind of coming up high school and college, I was coming up at the time of like Michael Milken and, Carl Icahn. And that was the leveraged buyout boom, right? Drexel Burnham Lambert, like some of your audience may remember that. The young folks need to go look it up.
Financiers, the closest we have in our community is Reginald Lewis. Yeah.
Reginald Lewis, one of my heroes,
yeah.
right? So, initially did the McCall deal, the patterns for the dresses, and then went on to buy the offshore assets of Beatrice for just about $1 billion, right? So I was glued thinking I was going to go into corporate finance. And I think what makes my journey really unique is, kind of having that basis in finance has been very helpful, right? And then I think also the natural interest I had as a kid in computer science, right? The ability to bring those two worlds together. I can understand technology. I can have some, all of my skills are way out of date, but I can still at least have a fairly meaningful conversation with developers. I understand a lot of this technology at a high level. Even AI. When I was at Cal, this is all the way back in 95 to 97, I was focused. I had this book somewhere in storage. It's called Autonomous Agents, right? And so it was basically thinking much further ahead to where we are now, where autonomous agents are a thing again. This whole concept of having computer software that can do the most rote, routine tasks, booking your flights, scheduling meetings, making dinner reservations. That was a thing back then, but we didn't have the data, we didn't have the technology to be able to execute on those things. So I've always had this interest and been naturally intellectually curious about technology. But then I also was very much into finance, and who knew that bringing these worlds together was going to happen. And then a very important inflection point in my career was working at eBay. And, a few meaningful things happened. Number one, during that period, this was like 2002 to 2006, eBay was Google's biggest customer. So I got to learn about Google's business and search engine marketing, right? And that was around the time Google went public. eBay was the biggest customer. And then eBay was spending so much money, they had to figure out, well, how can we get search results for free? And that led to understanding search engine optimization. So how to create content and structure websites that would get picked up in Google's free search, right? I had to learn about community, the marketplace model in and of itself, which has now become the cornerstone for things, such Uber, Airbnb, the whole notion of Uber is the world's largest taxi company, but owns no fleets. Airbnb is the largest hoteler, but owns no real estate, right? But it's a marketplace model. That eBay originated at scale, the marketplace model. So I learned all of these different elements that have led, that's right, it was the very beginning, and an amazing network.
So going into, VC, what were the challenges that you had as a black man in the VC space? Because you are, asking money from, major sources of capital, and I imagine not that many people saw someone like you asking for those sums. What were the challenges, and how did you, overcome those challenges, and what lessons did you learn as you're moving forward with Plexo Capital?
That question opens up so much, because in order to start a firm that one intends to grow, and this is, obviously I'm not trying to be a one and done when it comes to Fund 1 or even done with Fund 2. We have much more work to do. I almost feel like this is like maybe the second inning. So we're just getting started. And what's most important in starting a firm, again, this is more like being an entrepreneur. So it's very important when starting a firm to understand how to form a firm or form a venture capital fund, how to raise for a venture capital fund, and how to manage a venture capital fund. I mean, those are the three things that are most important, right? And arguably, the most important is raising the fund, because if no fund is raised, then 1 in 3 don't matter, right? So the ability to have good mentorship, a lot of this information is available, but the problem is sometimes people don't know what they don't know, right? I was always pretty good about, okay, tell me what I need to know and I'll go figure it out. I'll go find the right information, or I'll go find the right people. I do want to expand on this because it's not easy to be able to be in the position that I am. I'm very blessed. And again, it was a result of a lot of great people around me helping support me to help position me for success. And one of the things that we started to do is I just kept a simple running list of all of the different links that I was finding around the web that were helpful in understanding this fund formation, fundraising, and fund management. And we have a structured program. I went to my network and I got experts across subtopics for all of those. Like a subtopic might be how to negotiate the limited partner agreement with your investors, or how to develop a portfolio construction strategy, like which companies am I going to invest to and how much and how many, right? And we put together video modules that are 15 to 30 minutes. Most of them are 20 minutes on average. So we have over 35 video content modules, and we have it on a professional ed tech platform. Anyone can sign up and access the content for free. We underwrote the cost. And the reason I did that is because this is yet another barrier for a lot of people, particularly people that look like us, to get that information to help them jumpstart their firms. And so I didn't want to charge for it, right? So we underwrote the cost. And then we also started a cohort, right? So again, our North Star was Y Combinator. So we had a cohort, initially it was virtual because of the pandemic. We're on our third cohort now, that's wrapping up, and we're about to start our fourth cohort. And these are GPs that are general partners that are typically on Fund 1, Fund 2. Anyone can come in, it's not just limited to women and BIPOC. Anyone can come in. We have a selection process. And we have to date, through our efforts, and one of our efforts is we have someone that has an investor relations background who works with our team, and he helps provide introductions to a lot of these general partners, which is very helpful, introductions to prospective investors. So we have helped raise over $25 million for these different firms. We now have partners, so we pulled the GPX program from underneath Plexo Capital Management, and we started a foundation, the Plexo Foundation, and we have generous support from the Ford Foundation, which is also an investor, Alphabet, which is also an investor in Plexo Capital Management funds, Gunderson Detmer, Silicon Valley Bank. So all of these people have come together recognizing this need to help us fund this program that we think is a really important program. In fact, for our fourth cohort, we're going to have a geographic focus. Latin America.
Yeah.
That's right.
So when you look at Y Combinator as an inspiration point,
Yes.
what was it about Y Combinator that just totally, gravitated you to that model?
It was the fact that when I thought about, okay, what's my vision for what GPX can be as a program, there was without question of the models, Y Combinator stands out. It's had the biggest run of successful companies that have achieved venture scale and gone public and returned a lot of money to investors. And so what does Y Combinator do? Well, they have their startup school, which is online video-based content that anyone can access. And then they also have their cohorts where people come in, go through a structured process, and then it culminates with their demo day, where the people that were in the cohort come and present their startup ideas. So we have the equivalent, right, of the first two. We have our GPX online, that's like the startup school. We have the cohorts. We also have a demo day. So we have the Plexo Capital Summit, where the cohort members are able to pitch. We usually have over 100 limited partners. And so and if anyone wants to come as a limited partner or wants to invest in venture funds, our next Plexo Capital Summit is coming up later this fall in October. Folks can reach out and come and hear the pitches. Now, the one piece that Y Combinator does that we still are focused on achieving is Y Combinator will invest into all the companies that come through the cohort, right? So that's the one piece that we don't do, but that's upcoming. So the goal is to, as we go through this next phase of fundraising, to raise a fund called the GPX Fund that is focused on investing into the participants of the cohorts through the GPX program.
And even more that it helps, level the playing field, create access, and what have you. I have two other questions.
Sure.
One question deals with, the fact that 3 years ago we had a number of corporate equity pledges.
Yes.
To support the advancement of African Americans, especially in the entrepreneurial space.
Yes.
And this is almost a two-part question.
Sure.
I'm going to ask that as the first part.
Okay.
Because I have a second part to that. How did that, help Plexo, and how did that help advance Plexo in terms of investment or, the flow of entrepreneurial talent? Did that have an impact?
I'm sure that it did, right? Without question, there were programs, or at a minimum, I believe there were corporations that were looking to do something and identified Plexo Capital as the right vehicle to do so. So when I talked about our evolution and spinning out, I mentioned Alphabet, Intel, Cisco, Hampton University, and the Ford Foundation. Those were the initial investors in Fund 1. Now that was pre the unfortunate events that led to the killings of Breonna Taylor and George Floyd. Post, when we raised Fund 2, we were able to add a number of investors as well. Southern New Hampshire University, we added Hearst, we added the Home Depot, and we added Mass Mutual, which is one of the kind of the unofficial sponsors of the Black Economic Forum. Now, we were very fortunate to be able to add that list of blue chip investors, and I do believe that in part, for some of them, it was based on the insight around doing more to help. And so I think we were able to benefit. We also, of course, have investors that are purely focused on our ability to be able to provide top performance as well, right? To make them money, right? Without question, that's an important aspect. But I do believe that this is a win-win situation because we can deliver top quartile performance while at the same time helping to address a lot of these issues. And I think not all the time, but sometimes people think that there needs to be a compromise when doing good. And this is one of those opportunities, investing with Plexo Capital, where there's not a compromise. You know, we can deliver the same performance while also doing something that's going to benefit folks.
The second part of that question is, now 3 years later, you have a Supreme Court decision that makes unconstitutional affirmative action, especially in the education space.
Yes.
We see that spilling over into other areas such as business. And we have some of the forces that drove that, looking to, dismantle, black-owned, black companies and initiatives to advance African-American entrepreneurs. The most recent example is the American Alliance for Equal Rights filing a discrimination lawsuit against, Fearless Fund, which's mandate is to provide venture capital to black women-owned businesses. How do you respond to that action? Does that provide you with concern? Do you think that needs to be, we need to fight back on those decisions? Do you have concerns about Plexo, given, Plexo's, mandate and focus?
So I'm fortunate that I don't have a concern around our mandate based on the filing of the lawsuit against Fearless Fund. Our model is a little bit different in that regard. So, I'm sure everyone is aware of Fearless Fund and the lawsuit, but that lawsuit was specific to grants being awarded by Fearless Fund specifically to black women. And in the process of determining who should receive that grant, what Fearless Fund does is they have an application, and one of the criteria is that the recipient or the applicants, and ultimately hope to be recipients, are black women. And there was also some other language that was in that application that the applicants had to adhere to. And the argument by the AAER is that because of that additional language, it in essence creates a contract between Fearless Fund and the applicant. And what AAER is doing, and this is like the thing that really upsets me the most, they're using the Civil Rights Act of 1866, which was the first Civil Rights Act enacted by the United States government, to be able to help black folks. And one of the specific areas around that is Section 1981 of the Act of 1866. 1981 says that no contract can have a stipulation around race, right? And so what they're doing is, that was designed to be able to allow black folks to be able to enter contracts, and now it's being used against us. And so I don't have a concern yet with our model for a few reasons. We do have a myriad of different ethnicities and genders, right? We even, we have white males that have received funding. So I'm not concerned about our model, right? But I'm extremely concerned in general, both initially for Fearless Fund, as well as I'm concerned looking ahead at the impact that could have on certain individuals and institutions that are considering or have made or looking to make more or considering making investments into firms like Fearless Fund that do have a specific mandate to help a particular population that historically has experienced systemic racism, and sexism. We can, they didn't really focus, AAER didn't focus on gender, but I am concerned looking ahead. And if we think about Fearless Fund, right, we talked a little bit about the stats. I mean, what do black women receive? Probably 0.0007% of ventures, some extremely small number, right? Now, no one has cried about and issued a lawsuit against some of these larger firms that only invest in white males, right? So I'm concerned that, going back to your question, do we need to fight back? We do. We need to think about what the response is going to be as an industry and ecosystem. And there's a lot that's happening behind closed doors, right, which is a good thing. Some has already opened up to the public. In fact, here at Martha's Vineyard a few weeks ago, there was a convening of black female venture capitalists, and they've all signed an open letter pledge in support of Fearless Fund. I mean, that's a good first step. But I think we also need to start thinking about policy as well. This needs to get the attention of our policymakers at the federal level. And, it's interesting just to think about how this industry of venture capital used to be this little cottage industry, and, it was, just a few people on Sand Hill Road in Palo Alto and Menlo Park, and now it's expanded. And all we're trying to do is be as inclusive as possible, right? And money is green, right? So if we think about the ability to make money, I mean, people should be supportive of this initiative that a lot of folks have to put money in the hands of a different breed of entrepreneurs that better reflect the demographics of our society, because opportunity isn't constrained to one particular gender or ethnicity. And so we need to make sure that we can, I think, address this at the policy level. And increasingly, I think the ability to think about policy, which is historically, in the laissez-faire approach that venture capital has historically had, hands off, right? Government, just let us do our thing. I think we're going to have to increasingly start to think about policy and how policy is going to be needed to make sure we can address issues like this.
Yeah. I married it too because of those two questions, because you talk about policy, and actually the actions that were taken 3 years ago was engagement in policy, or at least an investment in trying to solve a problem that was that had a policy focus to it.
Yes.
Last question is, and we have a focus on boards and diversity on boards. Just give me your quick history in terms of being on boards, and you have a focus on board readiness, or you've been engaged in that.
Yes.
And share with me, your experience and how it's helped you, and then two, how can we go about diversifying boards with young, entrepreneurs of color?
I have been very focused on the corporate boardroom. I think it's an important place for voices to be heard, to be able to influence and shape corporate strategy. And I want to see more folks that look like us, obviously. I think that's really important. And I have participated in a number of initiatives. There is the group that was kind of informally, and now it's become formal, started by John Rogers and Melody Hobson of Ariel, the Black Corporate Board initiative. And so that is a very successful initiative that is really focused around a convening annually of the members that are Black of corporate boards, mainly the Fortune 500. And that's very successful. That led to an initiative that I was able to participate with. Deloitte partnered with the Black Corporate Board Directors and had a corporate board readiness program. And my participation was in helping to design one piece of the content which focused on private company boards, mainly private equity and venture capital backed boards, because that's often an overlooked opportunity. I think people generally tend to focus on the big public company boards, but these private company boards can also be meaningful and lead to financial rewards too. it's a company that ultimately enters the public markets, then there can be a nice financial return for board participation. So I have personally served on private boards and a public board, and it's a great experience as well. It's a little bit of recognition of the knowledge that one might have. And I think it's important for executives, especially younger executives, to consider as part of their overall career trajectory and start to do the little things that can happen early in their career to help position them long term. What ends up happening is, a lot of these people that are really successful, it's kind of they're semi-retired. Like maybe they're not working at one specific company anymore, but they might sit on several boards, which helps, transition a lot of the knowledge that they have to the next generation that are leading a lot of these companies. And then I think it also, for the individual that can sit on multiple boards, it helps to keep them engaged and active. Ken Coleman was legendary for sitting on a number of corporate boards and providing his sage advice.
Yeah, that's why he's such a dynamo and so sought after.
Absolutely.
In terms of being an advisor to so many entrepreneurs and corporate executives in Silicon Valley and elsewhere.
And beyond.
The boards that you served on, what were those boards? Or you share a couple of them that you gained the most insight and experience?
Yeah, so private company boards. So one board was a small diagnostics company that focused on testing, and this was over a decade ago. And then recently, the private company board was a company that's focused on the collectible space, which is good for me because it leveraged my eBay background. Okay. And a public board that focused on internet access, Wi-Fi access on airplanes.
That was iPass?
iPass.
Okay, okay, yeah. This has been a fascinating conversation. I really appreciate you spending the time, but this was I think a great dissection of the VC space and where we are in terms of raising capital and looking at how we can seed more innovative entrepreneurs of color. And we look forward to seeing your growth and the impact and the next stage of Plexo Capital.
Thank you.
Okay, thank you.